So gold has been sliding out of this bullish trend. So it's now on the back side of this trend. So the bias from that point alone is bearish. When you combine it also with the trend line resistance, now you could argue that you can pull it all the way into here and just call that bullish. In fact, so let's do that. It's been some days since I had that trend line drawn, so forgive me on that. So now what we can do here is put those swings. Okay, so essentially we're in a neutral scenario here, and I'm going to draw that box a little bit higher. So we are essentially sideways. The outlook is neutral. Or bearish neutral on the basis that we're starting to break. Now I'm going to call it completely neutral. Until we break below these lows, or even, I mean, you could call it, let's pull the box all the way down to there. So we got our first, I think I've said before, the 1930s are an important area of support. So if we break those, then we're flipping neutral, more bearish than neutral, until we can break below, significantly below the 1880s. Um, we could be in a early stages of distribution. This is on a daily chart. Um, I think no matter the outcome of the Fed, it's still an unclear picture going forward, regardless of the outcome today. And that means for gold, more sideways action. We could see the extremes of this uh, channel tested one way or the other, but for for a outright breakout, I don't know that it's going to come straight away. Um, I mean, if the Fed was uberly dovish, signaling that July would be on hold, everything is on hold for the foreseeable future, that they're starting to see plenty of disinflation metrics, then yes, gold could take off. In fact, um, in order to do so, it would need to break 1980, 85, and then you're looking at the 2000s and beyond. Um, I hope that answers your questions. I'm not sure what time scale you're looking at, but again, this is the Fed. Um, it might just be best to let the dust settle and assess things how they are tomorrow. If you miss significant moves on the back of the Fed, well, that's fine. There's plenty other days in the month and a year ahead to trade. Um, so I wouldn't be too worried about trying to benefit from um, every dollar that gold moves on any given day. Um, so I would just sit back, get your popcorn out, and watch this from the comfort of a nice sofa and let things pan out. But if you are looking to trade, then at least let the dust settle throughout the statement, into the press conference. You tend to see a lot of volatility around the statement and the initial announcement. It dies down somewhat, and then the initial stage of the press conference, again, volatility picks up, dies down a little bit, and then you're looking for conclusive remarks from Powell for the final moves over the course of the event.